When people say, are we done? Should we buy the dip? I'm like, no, you should sell the rip. Anytime things rip here, sell into it, get more cash, get more liquidity, and be patient, because it's a long-winded way of saying, I think the economy does an L, ultimately a U, because we will survive, right? We will thrive in the future. The future is bright. And everybody says, oh, you're so negative. I'm like, well, I'm not negative. Again, I'm just a realist. In the short run, it's gonna be really tough. In the long run, I'm the most excited I have ever been in my life. The Fed is designed, right? The Fed is not federal and has no reserves. It isn't owned by the government, it's owned by the banks. It's designed to take our wealth through inflation. Inflation is not good for you. It's not good for me. It's not good for you. It's not good for anybody. It makes the elites rich. It's why we have the greatest wealth and income inequality in the history of mankind. Bitcoin frees us from that.
Mark Yusko begins with a fundamental observation about market dynamics that often escapes the average investor. The biggest up days don't happen in bull markets, and conversely, the largest down days occur during bull markets as well. Bull markets are characterized by steady incremental gains, but see sharp declines in response to bad news. Bear markets, on the other hand, experience daily losses, but spike sharply on the perception of good news. This insight underscores the importance of understanding the volatility inherent in market cycles and the psychology that drives them.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
That most people don't realize. The biggest up days in markets do not happen in bull markets. Right. Bull markets go up a little bit every day and go down sharply on bad news or perceived bad news. So the biggest down days don't happen in bear markets, they happen in bull markets. And conversely, a bear market is a market that goes down most days, but then spikes sharply on good news or perceived good news. Like, things weren't as bad as we thought. They're still bad, but they weren't as bad as we thought. So clearly, if the Fed does the Powell pivot, which I fully expect, for a short period of time, the market would definitely do a V. We might see a 10, 15% type of move. Crypto might follow. The problem for crypto right now relative to markets is everybody says, oh, it's trading like a speculative asset. Yes, because the free float of crypto, particularly Bitcoin, is so small.
So small, right?
65% of Bitcoins haven't traded in the past 12 months.
Right.
They haven't moved. And the hodlers don't care about short-term price. They care about long-term value preservation.
The dips are great because they just add to their stash, right? So
yeah. And so the problem is the short-term holders, the people who bought only because the price was rising. And I'm gonna back up, 18 months. Again, huge policy error. So you make the dumb decision to lock down, right? Respiratory virus, we're gonna lock everything down and stall the world. Dumb, okay, fine. But you did that. But then you made a compounding of the error by giving people free money, right? You literally sent people free money. So you lock them in their apartment. You say you can't gamble. You can't go to Vegas. There's no sports, but here's some money for free. So what did they do? They started gambling in the markets, meme stocks, crypto. Oh, and then what happens? Oh, well, we'll loan you some more money on top of that money so you can lever up and gamble more. And look, there's 4 types of participants in markets. There's investors. Investors are good, right? You try to buy what's cheap, you hold it for a long time, you sell it when it gets expensive, you keep investing. That's good for market. Traders, no problem with traders. They try to scalp a little on the ups, scalp a little on the downs. Professional, fine. Then there's speculators. Speculators buy things because the price is going up. They don't have any knowledge. They don't have any interest. They just, hey, it's going up. We'll buy it. But then there's gamblers. And gamblers are the worst because they're using other people's money, borrowed money, or free money. They don't care if they lose it because it doesn't have any meaning to them. They didn't earn the money. Those firms they entice people in promises of riches, get them to over lever, and they are trying to steal. Like, oh, didn't think about that. So maybe that's true, maybe it's not, but no one stole the Bitcoin per se. They didn't go in and hack it and steal it. You shouldn't have had the leverage. But we have leverage in stocks, we have leverage in bonds, we have leverage in crypto. Now, a lot of that leverage has come out, but it's still higher than it was in 2008, believe it or not.
Wow. Really?
Crazy. It's crazy. And so when people say, are we done? Should we buy the dip? I'm like, no, you should sell the rip. Anytime things rip here, sell into it, get more cash, get more liquidity, and be patient, because it's a long-winded way of saying, I think the economy does an L, ultimately a U, because we will survive, right? We will thrive in the future. The future is bright. And everybody says, oh, you're so negative. I'm like, well, I'm not negative. Again, I'm just a realist. In the short run, it's going to be really tough. In the long run, I'm the most excited I have ever been in my life. Bitcoin is cheap relative to its history. Stocks, NASDAQ and S&P, are still expensive relative to their history. The S&P would still have to go down another 30+% to get to fair value.
Right.
We're arguably below fair value in Bitcoin. Now, that doesn't mean we can't go lower.
Right.
But I think stocks have much further to fall, because I think they need to get to fair value and go below fair value. Whereas, truth be told, I'm still a little nibbler here. I don't believe in buying any asset all at once. I think you should buy some, and then if it goes on sale, buy a little more. If it goes on sale, buy a little more. If it goes on sale, buy a little more, and just keep accumulating. And for me, particularly with Bitcoin, and I'll make some people happy and some people angry, I believe in the base. Bitcoin, Avalanche, Solana, Ethereum. Now, why do I believe in that? Well, I believe in the stack. So in the internet, we have TCP/IP, FTP, HTTP, SMTP, www. In the new stack, I think it's Bitcoin, Filecoin maybe for FTP. I think Ethereum is kind of like www. And then there's a bunch of things fighting to be HTTP and SMTP. And is that Solana? Is it Cosmos? Is it Polkadot? Is it Avalanche? Is it something else that hasn't been created yet? Is it Polygon? I don't really know yet, and I'm not super techie. I have other partners that do that. I'm the financial services guy. But I do think that owning that base layer is really important. And to me, Bitcoin will be one of, if not the base layer. The Fed is designed, right? The Fed is not federal and has no reserves. It isn't owned by the government. It's owned by the banks. It's designed to take our wealth through inflation. Inflation is not good for you. It's not good for me. It's not good for you. It's not good for anybody. It makes the elites rich. It's why we have the greatest wealth and income inequality in the history of mankind. Bitcoin frees us from that. It is a deflationary asset, not an inflationary asset. It allows us to do all the other things on all the other chains and all the other businesses that will be Web3, that will be the metaverse. And it's all going to happen. And that's the cool part.
Yusko also warns of further market liquidations, particularly in stocks, which he believes are still overvalued. The S&P 500, in his view, needs to drop by another 30% to reach fair value. While Bitcoin may have already reached or even dipped below its fair value, Yusko acknowledges the possibility of further declines, especially as the broader market correction continues. Yusko's long-term optimism shines through, particularly when discussing the potential for Bitcoin and other digital assets to thrive in the future. He advocates for a patient approach to investing, where investors accumulate assets incrementally, especially when they go on sale during market downturns. In this regard, Yusko echoes the wisdom of long-term value investors, advising against trying to time the market, but instead focusing on buying undervalued assets over time.
The public markets have got a ways to go down, and I think the liquidations will accelerate. And that's when you see these fast drops. That's people getting margin called. And that's what's going to hurt crypto. Because in a margin call, you don't get to sell what you want to sell. You sell what you have to sell.
Yep.
And that's why gold, bonds, crypto back in 2020 went down so much. Everybody's like, why are those going down? They're not getting impacted. Well, no.
People need
But
the
if
cash.
you own a liquid asset and you get a margin call and your stock went down 50%, well, you can't sell that to cover the margin call. So you got to sell something that didn't go down. And I think that's where we are. And I do think, unfortunately, still, particularly in some of the alternative tokens, they're just over-levered, right? People didn't learn the lesson that the problem is you can't learn it from other people, right? You have to feel the pain in your gut of the loss. And leverage can never make a bad investment good. Can never turn a company around and make it have cash flow, can never make a bad investment good. But it can, and unfortunately sometimes does, make a good investment bad because it forces you to sell when the price is below the value. And this is, I stole this from John Burbank, and John from San Francisco. And John has a great line: price is a liar, right? The price of anything, Apple stock, Amazon, Bitcoin, Ethereum, has nothing to do with value. Value is determinant, right? We can look at the size of a network if it's a crypto. We can look at cash flow if it's a business. The value we can determine, but the price is set by two people that decide to exchange a very small amount. If you and I wanted to trade 100 shares of Amazon, that price of $2,100 or whatever it is today, that's the price. But if I had 1 million shares, that is not the price, because you're not going to pay that same price for 1 million shares. You might pay for 100 shares. So same is true of overvaluation and undervaluation. Humans do two things really well. We buy what we wish we would have bought, and we're spectacular at it, right? We constantly chase the hot dot and buy things after they've already gone up, and then we sell what we're about to need. Like, investing is the only business I'm aware of when things go on sale, everyone runs out of the store. Like, put wedding dresses on sale. People don't run out of the store, they run into the store, right? When you put stocks or crypto on sale, people run out of the store, and the cheaper the price, the further they run. And so the challenge is that we have to remember that greed pushes prices way above fair value.
Yusko sees Bitcoin as a transformative technology, one that will play a crucial role in the future of Web 3.0 and the metaverse. As traditional markets continue to face turbulence and the effects of over-leverage unwind, Yusko is confident that Bitcoin and decentralized technologies will emerge as key drivers of innovation and financial empowerment.
Please like and subscribe my channel.